free oil analysis and another $1,000 move from Bitcoin.
Here comes the money.
Here we go. Money talk.
Here comes the money. Money, money, money.
Dollar, dollar. Dollar, dollar. Cheating, bling, bling.
Here comes the money.
Here we go. Money.
Hello Adrian, and welcome once again to the Dang Oracle. Thank you for joining me once again. That was an amazing log stream that we had yesterday. Well, longer than usual. Usually I try to get my episodes around 30 minutes, but it went longer than expected. There was quite a lot of content, a lot of things happened as well, and we went over the 1 hour. But it was a very good time. A lot of things happened and a lot of things to discuss, and yeah, let's get into it. And first of all, let's check our COVID and what is going on in the rest of the world. So, United States are now at 784,000, almost the 800,000 confirmed cases. Spain has crossed the 200,000, and then following by Italy. And Turkey, Iran, they're getting towards near the 100,000 as well. So let's take a look how it looks on the chart. Yesterday we were at 2.4 million ish, and today we are at close to 2.5 million. But once again, we can see that the chart is finally starting to flatten. I can't wait to see finally a little drop down, a little drop down. Anyways, USA still not looking good, still going up. Spain, it's starting to show some signs of flattening. Italy is still going up. France, sadly enough, still going up. Germany is showing some sort of starting to be flattening. And UK, still not good, So what this COVID virus is basically causing is, of course, what we all know is the stop of basically the whole economy. So we've never had that before as bad as now, where because before, when it was a crash, we had a crash of just the real estate crash, the banks that were crashing. What we did have before, the tech bubble, we all remember that one, Amazon and and all the tech companies that went into a bubble. But this time, it's something way worse. And I think a lot of people are underestimating that because, yeah, it was really bad in 2008, 2009. It was really bad in 2001, 2002. But the problem was, every time it was just basically one sector. But this time, the whole economy is basically on a standstill. So I think the effects, that's also why the FED is doing everything that they can, right? Like, they've been printing a stimulus package of like $7.2 trillion. So it's a lot way worse than a lot of people are thinking, right? But yeah, yesterday, because of the coronavirus, not only because of the coronavirus, because there's a lot of history that followed before that, and I'll go over it a little bit shortly, and that is the topic of today, oil. So let's go to our crude oil price. So what happened was, as you can see here, we were at a price of around approximately $65, and people were already panicking right before, because we came from here, which was $76, and that's basically it. Around this $70, then we had a little crash, but we had a V-shaped type of correction. Then it went sideways, all good, and then here, that was in January, things started to heaten up because there is a price war that happened between America and China, and that caused this little slump here. And then, yes, then what happened then is insane, right? So take a look. This is what happened. From that price point, it went here. It went here. So yeah, it's just it's so amazing. Yeah, there's very little to say, right? So it went basically to zero. So oil became free on the market, and if you think that was bad enough, then well, let's look at the futures of US oil. The future, this is what happens on the futures of oil. So around the same price point, of course, around the $65, something like that. Then things started really bad, and then this is what happened yesterday. It went down to not. This is the zero line, by the way. This is the zero line. It went to negative 40. Negative 40. So basically, for people, I mean, when you were selling your oil, people were paying you basically to take the oil off your hands. And we had a, let's call it a nice recovery, back to minus $3.23. So we are still on the futures for oil, negative 3. And you must be thinking, like, how can something be negative? You know, it's already bad that it goes to zero, but it goes to minus 40. How can that be, right? So to explain in a short way, it is quite simple, right? These are futures. So for traders who are trading futures or derivatives, for example, they agree on a specific price point to buy the oil and settle the oil at, for example, if it was a monthly future, the month of May. So for example, this future contract will be settled at the end of this month. So basically at the end of this month, let's say you bought a price oil at $35. Then at the end of the month, you would be settling the price, whatever the price is at the end of the month. And basically that's how futures work. But the problem is people who are trading futures, they are not interested in oil. They don't want to have the oil or anything like that. What they want is to trade the price and just take the profits, right? It's just the price that they are caring about. So if they are longing for $35 for a barrel of oil, they want the oil to be $40 so they can sell it at a profit at the end of the month for $5 a barrel, and then it goes to the person that bought it. So what happened here is, at the beginning of the month in April, people were trading oil, and they saw the price of oil was like, $20. So a lot of the traders were like, well, $20, I'm gonna long this because it cannot go lower. But it can go lower, bro. It can go lower. It can always go lower. It can even go negative, apparently. So basically, that's what happened. So at the because the futures contract at this end of this month are going to expire, people who bought that oil at $20, well, if you imagine you are a buyer of oil at $20, the problem is these barrels, where are you going to stock it? Where are you gonna stock all that oil? Let's say you bought for $1 million of oil at $20 a barrel. Well, your plan was to basically sell it for a higher price, right? For like $25 or $24. You never expected that the end of the month comes and that you will be getting that oil, right? You can't stock it anywhere. So that's what's happening right now. The price is so low, and there's nobody who wants to buy oil right now or stock oil right now, that the oil is going to the traders. So it's going to the people that are buying it but who don't want it. So what happens is the people that, because you're getting it, so you're basically trying to sell it or give it away to anybody who wants it, because there's no space for you to stock all that oil, right? But then nobody wants to take it. And because there's a oversupply of oil, and there's no place to stock the oil, right? So warehouses are full of oil already, and they don't care about that oil. And then this is basically what happens. So after the whole trade war saga, we'll go over that in a bit. But that's in short what happens and that's the reason why it became negative, negative price, and why traders were actually giving people money to take that oil, and that's the reason why. So they were willing to take that oil off your hands if you pay them. So basically, they not only got oil for free, but they also get paid for it to take the oil. That's how amazing futures or derivatives can work nowadays. So yeah, that explains how on the futures that it can go below zero. On the spot price, obviously, it just went to zero. It didn't go below zero. But yeah, if you I'm telling you, if you look at this this red line, it's just amazing, obviously. And as you can see right now, we're still negative $4. So yeah, guys, free oil, and you even get paid for taking the oil. If you have space, if you have stock warehouses, well, you can get free oil right now. Go for it. That's what I would say. Try to get some gold, some oil, because the fun is still is gonna, and there are some people asking me like, should I long this? Like, you know, it's negative, right? Shouldn't I long this? It can go lower, bro. Well, like I said, the futures will only expire by the end of the month. So we still have around 9 days for all these people who have bought oil to get rid of that oil. So do I think that we will have lesser negative numbers? Sure, maybe. But yeah, the nearer we go towards the settlement date, if you know that you will have 1,000 liters or gallons of oil coming, and you don't know where to stock it, yeah, of course you're going to be panicking and trying to get rid of it, right? So yeah, anyways, I know I wouldn't, you know, well, you could try to temporarily long it and hope that we get, like, you know, some big countries that are buying the oil, which was what happened today, by the way. That's the reason that the oil went from minus 40 back to positive for a little while, over $1. But yeah, we'll go over that also in a bit. But yeah, this is the situation right now, and most likely it can get worse, strangely enough, and definitely if it goes nearer and nearer and closer towards the end of the month, until the contracts are going to be settled, right, at the end of this month. So fun times for oil, very fun times. So let's go back into a little bit of a history, because how did we get into this situation, right? Like, there has to be some situation, right? So what happened was, of course, since last year we had that trade war between the US and China, and they put taxes on their products. If you imported product, China was saying if you imported products from US, you get taxed, blah blah blah. If you and then the US was like, if you were producing, if you're putting your company and producing in China, you'll get taxed for your products. You should be producing things and, you know, manufacture things in the US, and so on. It was a whole trade war, and things got heated up for a while. But during that time, what the US did was, well, we don't want to be depending on anybody if everybody is going to be like that, right? So they had the trade war. They were not in good terms with China, but China, of course, has a lot of economic powers. They have a lot of manufacturing. They have a lot of yeah, they're quite independent. But the US thought like, okay, well, we don't want to be dependent of you guys, and the thing that we're going to do, we are going to produce our own oil. So what happened was, they were opening companies and they were setting up oil companies, and hundreds and hundreds and hundreds of thousand people employed to get their own oil, so that the US would have their own oil stock and not be dependent of like the Middle East or Russia or anybody. That was basically the whole ideology of Trump and the US, to not be dependent of anybody, right? So that went on, and then what happened is that, of course, because if the US is starting to produce their own oil, there's a higher supply of oil on the market, on the world market, right? So because of that, what happened is the Middle East and the OPEC countries, basically, they had to cut down on their production. Same for Russia. They had to cut down into their production. So what happened then is Russia and Saudi Arabia came together and said, okay, guys, well, there's too much supply of oil here. We have to make an agreement here to cut down on the production of oil, or things will go very, very badly, right? So what happened is Russia and Saudi Arabia started discussing, but Russia said, F you, I'm out of this. We're not going to do anything. We're not going to lower our production. We don't care. We need this money, this oil money. So yeah, whatever, you guys do whatever you want. We are not going to be reducing, or they didn't come to an agreement on reducing the oil production. So that's basically what initiated the price war between Russia and Saudi Arabia. So in Saudi Arabia, on the 8th of March, what happened is they initiated a price war. They cut down 65% of the oil price. So they cut down 65% of their oil price to be able to be selling their own oil first, before other countries would be taking, of course, oil from Russia or oil from the US. That's basically what they thought they wanted to do. Hi, Danilo. Thank you for following. I hope you enjoy. So where was I? So yeah, Russia went out of the meeting. Saudi Arabia and on March started cutting the price by 65%, forcing the competition, because when there's competition and somebody starts cutting the price, of course the competition has to follow, and the competition followed and also start cutting their price. So what happened then is everybody started lowering their price, fighting, and the price started to crash, right? So this basically the price starting to crash on the oil. Then what happened is, of course, the coronavirus. So because of the coronavirus, the demand went close to zero. Like I said, the whole economy is on standstill. There's no oil necessary. Nobody is driving their car. There's no flights. There is no traveling. There is no, basically nothing, right? Very, very, very minimum amount of oil is required. So then what happens is the following, right? Production is so high, demand is literally zero. So it's just market, right? The market action is going. And the problem is, on top of that, during the price war, what the FED did was support the American oil companies, because the American oil companies were manufacturing or producing oil at a loss because Saudi Arabia lowered their prices, right? So they couldn't, because of course the oil production in America, the cost of it is higher than in Saudi Arabia. And what happened is the FED bailed out once again, supported all these employees because they didn't want to have unemployment rate to skyrocket once again. So they were spending so much money to bail out the American oil companies. And that's also the reason why OPEC and Russia are super pissed off at the FED, by the way, because they kept supporting. But because they supported the American, instead of, if for example all the American oil companies went down, then the issue would have been a lot less, right? So the supply would be a lot less as well. But the FED caused that the supply would be increasing by letting the American companies as well produce oil. So we have so much oil, and we had literally zero demand, and warehouses and stock places are pretty much none to be found anymore. There's no more space to be stocking these oil barrels. And then this is what happened. So that's a little bit the history crash course on what happened and how we got to this point where we are basically negative on futures, and $0 on gold. So yes, and so really funny, of course. What is China doing literally right now? And you can see this article here. China is starting buying oil for state reserves after the crash. Yes, yes, you got it. After the price is going down, what happens is, look at here, they from 859 oil barrels, they went to 950, close to 950 oil barrels. Because, of course, how can the Chinese be not taking free oil? I mean, that's you gotta love it, and maybe they even get paid for it too, for taking over the free oil from Saudi Arabia or from Russia. So yeah, like I said, in all times of problems, there's always opportunity to be found, and yeah, the opportunity was there, and the Chinese government immediately grabbed it and took a lot of oil. The problem is, of course, that's also one of the reasons that the price went back up a little bit here. As you can see right now, the price is hovering around $16, back to $16. So we had a nice bounce because countries are willing to take over some oil. But like I said, the supply of oil is way too high right now. And as long as the whole world is on a lockdown, there is no need for that much of oil. So and the problem is they can, okay, a lot of people are saying, well, why don't you stop production? The problem is they cannot stop production as well. It's not that simple to be just stopping a mining rig and this and that to stop the oil drilling. So yesterday we had the oil crash, and of course so many people lost so much money, right? We're talking about billions and billions of money that got lost here, right? And of course that has its effects on the rest of the markets, right? It's all, the economy is one network, right? So of course what happened is Bitcoin went down, S&P went down, and yeah, although we had a nice bounce here on oil, so that's why Bitcoin also had a small bounce so far. It's not that great, but we'll go back to Bitcoin analysis in a moment. First, I wanted to go, of course, over to our favorite S&P. So this is our S&P chart. Like I said, we are looking for to the break of this rising wedge. And of course, this is the SPY chart. So the SPY market has not opened yet. It's going to be opening at 9:30 with the New York Stock Exchange. And we can clearly see something very, very interesting. The pre-market price is already available. Pre-market price, sorry, right now is at 276, which would mean that we would be hitting or below already the rising wedge. And if we look at the S&P futures, the ES1, this is what we're seeing right now. So this is what I've drawn. It would probably mean that we will be breaking down today, tomorrow, the S&P. So if this breaks down, obviously it's a normal correlation, because although I know a lot of people want Bitcoin to be bullish, want Bitcoin to be decoupling from the economy, want Bitcoin to be the hedge, but Bitcoin is not a hedge right now. The Bitcoin chart is exactly the same chart as the S&P chart. The only hedge that we have right now are two things: the Dixie, that's the dollar index, and gold. Gold and then the Dixie are like two of the hedges. So people who are trying to hedge right now are either moving their money into dollars, into gold, into cash, or they are moving their money into gold. Although gold, let's go quickly over gold. As you can see, gold is also in a downtrend right now. Hi, Miguel Siguna. welcome to the channel. So if we take a look at gold, I've been telling you guys that we'll have a healthy retracement, but everything still looks quite positive. I'm pretty sure I'm very bullish on gold actually, and I still think after maybe like here this previous support at like 1650 or something like that, we'll most likely hit towards the 1800, because this is just accumulation right now and loss of liquidity, because like I said, there has been so much money lost on the other markets that of course in a financial crisis nothing survives. It's more like it's the same thing as like you're jumping out of the building and you're gonna fall, but you don't know how hard you're gonna fall. That's basically what happens during a financial crisis, right? So everything is gonna fall, but some things are going to fall a little bit less fast, and something is gonna go a little bit faster. That's basically what we are looking at. So overall, I still am quite bullish on gold. Would I immediately jump in? Maybe not right away, but yeah, it already went down to near the areas that I am already quite interested in, but I'm not convinced that we are there just yet. I still think that we will have a little bit lower first, but we'll take it when we get there. The more important things for me are of course the S&P, and definitely right now at 9:30 in an hour and a half, I think we will see some fireworks, right? We will see some major movements going at 9:30. Put your clock ready, get ready. I am ready. I hope you guys are ready as well, because I think there will be some nice trades that will happen starting the opening of that market. So let's go into Bitcoin. So this is the chart that I have on the weekly. Nothing much has changed. I have already told you guys about this pattern. This is a shooting star candle, and you can see this shooting star is still the highest point that we still have, and we got rejected there. That's why it's also called a shooting star candle. The next candle we have actually a quite bullish candle, but it's still not a higher high. This is still a lower high, as you can see. And the problem was, of course, since we had that oil crash, blah blah blah, it went down. Now, overall, I was already quite certain that we would have a downtrend, but was it possible that we still would have touched a little bit higher here? That was always possible. Like I've also said, between 7.6, 7.7, 7.8K range, we wick up there. Definitely a possibility. Is there still a possibility that we get there? Yes, it's still a possibility. It's still, in that range. It's still possible that we go there. But the problem is, the longer, like I said, the longer it takes for Bitcoin to be coming there, the faster there's more resistance, and so the faster that the price is gonna go down. Hi Edson, a buy. Okay, thank you for liking the stream. So what we are looking at here is also the slope of these two lines. As you can see, the slope, the distance is widening. So of course the longer that the price is below those prices, the faster and the more pressure there will be. And I do believe that once we get to that point, the breakage point of the S&P, then Bitcoin is going to follow as well. So like I said, let's go back to what happens. We have a bearish cross here. That is the bearish cross that I'm talking. Hi Herns Puma, thank you for joining me again today. We have a fan. So yeah, this is the bearish cross that I've been talking about for quite a while now already. This is on the weekly chart. Sorry, I have to go to my 2-day chart. Okay, this is the bearish cross that, okay, maybe I'll remove that EMA 21 first. Okay, to make it more clear, this is the bearish cross that I've been talking about, the EMA 55 over the EMA 200. That's a bearish cross here that we are seeing. And then if we go back into time, we can see the same bearish cross here. This is what happened. Price went down and then touched the orange line, or the EMA 55, and then went sideways and then completely crashed down. As you can see here, completely crashed down. Then we had this very same structure a little bit longer. It was in 2014 where we had that bearish cross pattern once again, 2014. Let's go there. And that was exactly here. In 2014, we had exactly the same. We had the bearish cross right here. What happened? Price went down and then up and retested. And this time, it even retested the EMA 200 before what happened. Before it all went all the way down, as you can see. So what I wanted to show you guys is the following. So we had that bearish cross. How many days did it take before we got there? So the date range. So we had the bearish cross, then we had the retest of this top here, and then when did we crash? So it took around 51 days here, 51 days before we did that major crash. So let's go back to our second bearish cross that we had in 2018 here. What happened is that we had our bearish cross here, we had a retest here of the EMA 55, then it took us 30 days before we made that major crash. So let's take a look here. So if we take a look here, what happened here, we have our bearish cross right here, and then I will consider this top here that we had top here that we had as the bearish as the top, and then let's take around where we're at right now. Oh, I took the price range. Sorry, has to be the date range. Lol. And that is right now from the bearish cross until now we are at what, 22 days. So yeah, the timing wise it seems to be getting shorter, and I do think that yeah, in this week we will get that major movement, and I think it's going to be sooner rather than later, because yeah, it just looks very bad on the S&P chart, and like I said, S&P is showing us the way. And okay, so what happens is, if we break down where do I see some major pivot points, well, that would be of course here, because where we had our support trend line, and that would mean a price of approximately here around the 4.8k. So does Bitcoin going back down to 4.8k, would it be possible? Definitely would it be possible. Can it even go lower? Of course it can even go lower, but that would be my first support, big support. And of course, once again, on the shorter time frame, it's not going to go down like in one shot, right? It's not because I'm saying like 4.8k, it's going to be 4.8k. It's most likely going to be 4.8k maybe in like 2 months, 1 month, maybe something like that. You know, we're talking here over a longer period of time. But that's basically what I am expecting in the medium term. Okay, so let's go back to our daily chart. Boom, this is our daily chart. And yesterday, well, actually during the night at 3 a.m. my alerts went off. I had to wake up. That's how life of a trader is. You have to wake up when all these alarms suddenly comes off, because all the alarms went off, because one of the reasons why is because I set an alert right here in my green box, and if price touches there, it basically wakes me up. And so that's what happened. It woke me up, and we touched that green box. And I've told you yesterday what my plan was already. I was not interested in longing, and as you can see here, this is the reason why, although my bias was towards the higher end, I was not really interested in longing as well. My plan has always been waiting for either this box, this green box here, and get my ultimate short position, or if the price would break down below this green box, to get a shorting position. And that's basically where we are at right now. So what happened is, price went down, touches my first support zone here at the 6.750k, 6,750-ish range, made that bounce back to our green box and got rejected from here. And that's basically what, for me, shows the market is ready for, most likely, for another drop. Does that mean that we cannot go back up higher? Of course we can, but I am already starting to build my shorting position, because this for me shows a rejection of the big trend, because this weak bounce here over the outside of this falling wedge is very weak. So I started shorting here already from like the 6.9. If it goes back higher to this higher around the 7K, I'll just add to my position. And basically that is my plan for the coming couple of days. Do I believe that we won't get, you know, if we cannot get higher? Of course we can, right? But it's just starting my building up my position, because of course I have a small position right now on at 6.9. If it goes to 7K, then we'll just add a little bit more. That's basically my plan. So let's go down and to our shorter term time frames. So the most important thing that we should be looking at is once again the bullish and the bearish crosses, right? So let's take a look here, and we're looking at the green line and the purple line. So what happened here a little while ago is the following. We had this one where the green line crosses bullish over the purple line, and a lot of people, a lot of bots and algos, what happens is they will be switching over to buy mode. They were very bullish, the old algorithms, but what happened was price got dumped immediately down, and then we immediately got a day after the bearish cross. So that's what happens if you are not paying attention. So people who were thinking that this was a very bullish cross, they got trapped, and then people got suckered in, and then basically price got dumped down. Then what happens again is here we got another bullish cross here, this one, and price did go up, right? So we have this bullish cross momentum, and price did go up. Although I expected once we got this bullish cross, once again we got dumped pretty fast. But during this whole month I have been saying, guys, it will be a lot safer for you guys to be finding a shorting position. The trend is still your friend, and the trend is down, you know. Let's take a quick look at the monthly chart, and I'll show you what the trend is. The trend is down. If you look at this is the monthly chart. If you look at this, lower high, 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 lower low. That's not a bullish trend. Okay, so if the trend is saying mostly down, it's almost way safer to be shorting, to be in a shorting position, because then you don't run the risk to be stuck in some stupid position, right? So, and then yesterday I've also said most likely I do think that we are going up, but do I want to be risking myself to be stuck in a long position? No, because I already know that it happened before. It happened here, it happened here. Every time we get some push up, suddenly it get pushed down by some random thing, right? So I am building my shorting position because right now, as you can see, we are trending once again down, and we can see here the green line is starting to slope down and waiting to be crossing the purple line once again. So what will if the price stays below 7K, stays below 7K, this green line is going to be sloping down. This EMA 200 is going to be going something like this, and then we will have the bearish cross. That doesn't mean, because usually what happens is before that or during that cross, what happens is price does actually retest the cross and then goes down. So does it mean that I don't think that the price is not going up anymore? Well, yes, I do believe that price can still go up a little bit. So anywhere around this zone, I'll be starting to short, basically, right? But I already started entering short position at like around 6.9 when I woke up at 3 a.m. I saw that move here. Basically, I saw this move here. Like I said, a candle close below the green box is for me very significant. Then I'm waiting for it to bounce back up, back to my green box. I saw that this was the 6.905 here, was my resistance line, and it got rejected from there. So I already entered my shorting position. What I should have done is actually taken profits already here at this spot here at my first support line, but this one I will be holding it for a little bit longer because I do believe that this is going to be a serious drop, and that's one of the reasons why I'm saying we are most likely looking at a $1,000 move overall, maybe this week already. Well, actually, the chances are very high that it's this week. If it's not this week, it's most likely the next week. So I am very patient for the next week, and definitely the next coming days. Actually, not even the next coming days. 9:30. 9:30 when the stock market is open later tonight. I'm telling you, it's most likely going to be fireworks that is going to happen. So let's be prepared for that. Let's check out some other indicators. So one of the things that I've been telling you guys was the historical volatility percentile, and I told you guys it was contracting, and at one point it is going to be single digits, and when that happens, then it means we will get fireworks. So as you can see, today and the last 12-hour candle close, we are at HVP 2. It means that it's not zero yet. It hasn't flatlined yet, but it means that some very, very, very big moves is going to happen, right? So like I said, I strongly believe that some very, very big move is going to happen within this week because the HVP is so low right now, and it can actually be happening very, very soon as well, even in a couple of hours. So that's one of the reasons, and of course my bias is to the downside for a lot of reasons. Of course, this the stock on the 12-hour chart is pointing down. Our RSI, although it's curling up a little bit, is still below the EMA. What else can we say? Candles formation, as you can see here, we got a lot of red candles, and now we are forming a few small green candles, but I think that is going to be very short-lived. So just looking at very, 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 very small time frames, what can we see here? What is this pattern here? Yes, you have it correct. This is some sort of a bearish pennant that we are forming. Something, if we look at this, something, well, maybe I'll make it a little bit more pretty here, something like this, and then this one maybe a little bit here, something like this. So this is some sort of a bear flag that we are forming, and let's make a measured move from this bear flag here. Let's take this one here. What happens if we take this here, and let's say it breaks down in a couple of hours? Here, where do we hit? There you get it. We are going to hit approximately my 6.4K area that I have been talking about. So yeah, I'm still quite confident that maybe even already later tonight that we will be seeing my target zone hit, and that's basically what I'm waiting for, and that's the reason why I'm building my shorting position. Dun, dun, dun. Okay, let's take a look at expected move charts. Expected move charts is currently saying the following. So very important is the two zones that I've been talking to you guys about. Let's go back to our daily chart. First of all, here the 7,025 region, because that's basically when we would be breaking out of that descending channel once again, and the other range would be here, this point here, around 6.7K. That would mean literally a break down towards our because there's not much support, as you can see, all the way down to 6.4K, which is what for me has the highest probability. So let's go and take a look at the expected move chart, and the first standard deviation on the top side is saying 6,946, which means not breaking out of the channel, right? So not breaking out the channel. So even if we go up there, it would be a good spot for me, like I said, to be adding some to my short. And the bottom side of the first standard deviation is 6,696. 6,697. So that means, once again, that we would be breaking below this support line. And what do I tell you guys, if we are breaking below 6.7k, if we're closing a 12-hour candle there, it's over. It's just how it is. It's over. It's good game. It's going down more. So basically, expected move charts is telling me the right, on the math side, the right probabilities for me to be entering my short position. That's basically what I wanted to say. So other than that, let's take a look at maybe the 4-hour chart, what the RSI is saying on the 4-hour chart. So right now, as you can see, we've been hovering between this pattern here, and as you can see here, although we are going back up a little bit here, it might get just rejected once again by the EMA right here, which is something that I'm expecting. So the bears are letting the bulls just touch the bearish control zone, not letting it out of the bearish control zone, and then push it most likely a little bit lower. Something very interesting that I wanted to show you guys is as well is this. So I've put this this line here and on the stock, and let's take a look at the tops of this. So the top of this was the 8th of April. Let's look at the price on the 8th of April. Price on the 8th of April was right here as this top here, and the price was 7.4. Right, and then let's look at this top here. The top here was on the 7th of March. Let's look. The price was on the 7th of March. Price on the 7th of March was 9.2. Right, here was here. This top here. So basically, what the stocks tops. What I'm saying is, and we can do one more here at the here at the 9th of Feb. 9th of Feb here, yeah, around here. So at like 10.4 ish. So yeah, what these stocks have been telling me is basically tops or local tops, right? So local tops, this is a top here, local top here, local top here. So if we get rejected, every time we get rejected from this local top, it means we have a lot of space to go down. So will we be bouncing? Most likely, yeah, of course we will be bouncing. And this is basically the support line that I'm seeing, right? We have here our lows that we had before. We have our lows here. So this is most likely the drop that we're gonna see during this week. That's basically what I am expecting. And as you can see, there's a lot of space to go down. So while stock is resetting and going down, price can go down a lot as well. So yep, that's basically what I strongly feel is going to happen. I think, yeah, pretty much by this week, by end of this week, we will be seeing 6.4k most likely, and then once 6.4k hits, another small bounce, then most likely here, what's this, 6.2k will make a lower, like here. See, if we bounce here, maybe here a little bit, and then bounce back a little bit lower, and then maybe a bigger bounce, then 5.8k, and then we'll probably be reanalyzing things a little bit on the longer position. But I do think that most likely before the halving, because this is the halving date at 11 May, we will be reaching 5.8k or even lower. So yeah, I'm not that bullish. Everybody's talking about halving. Sure, that's a very bullish thing for crypto, but what I'm looking at is the world economy, and the S&P is correlated so hardcore with Bitcoin right now. You have to look at it like this way, right? People are in need of money. They want to be able to be buying goods, be normal goods. Look at what happens in European and in American countries. They went crazy to buy toilet paper. I'm sure you saw some memes about, like, you know, how all these people are stacking up toilet paper. They've never heard about the bidet, apparently. We as Asians, we all know toilet paper is not clean. You have to use a fucking bidet. Okay, that's the only way to be cleaning your behind properly, right? But apparently Americans don't know that yet. So once they figure out that you can have like these amazing bidets that has heated heated seats and stuff like that, they'll be at our level, you know. So that's basically what I'm thinking. But anyways, the economy is basically dropping dead. People who are amount of unemployment is crazy. People don't even have money to buy food, literally to buy basic needs. They don't have money to pay off their rent, and so on and so on. So do you really think that people will be still thinking about Bitcoin and buying Bitcoin as a retail? I highly doubt it, right? So we have to be very realistic. The market that we are thinking about, the Bitcoin market, it's a very niche market. It's a very small market for now. Once again, I am very bullish about Bitcoin, like long term. But in this market, in this cycle, in this economic cycle, Bitcoin has still not shown that it has decoupled from the S&P. It has decoupled from the normal economy. It has not shown that it can act as a store of value or a hedge like gold just yet. Doesn't mean that it cannot happen, but I don't think that people are ready for it just yet. Can't that happen? Of course, but I do think 5 years, 10 years down the road, only then, most likely that's when things are going to be changing. A very cool thing that I saw today in an interview was somebody was calling Bitcoin MOIP. You know, you've heard about VoIP, of course, VoIP, voice over the internet protocol. You know, before, nobody believed in Skype. Nobody believed that you can make phone calls, FaceTime, and this and that over the phone, over the internet, and that would kill the telecommunications companies. Why? Because who would be still using a phone if you can just use VoIP, right? So somebody called crypto MOIP, money over the internet protocol. And yeah, it took a long time, right, before VoIP, well, not that long, but it took a long time before VoIP became standard. So I do believe that MOIP or our Bitcoin will be the same thing. Doesn't even mean that to be honest, Bitcoin is actually a little bit too slow, but yeah, people are trying to circumvent it by layer 2 solutions, but it's still too slow to be used as digital money. So maybe Bitcoin would become a store of value, like a gold 2.0, because gold is horrible, right? I mean, to transfer gold, physical gold, I'm not talking about paper golds. That's what's being traded right now. But like I said, there's so many issues with paper golds right now, or that I foresee in the future as well. So things are not really looking that great for golds. Bitcoin could become a store of value. That would be okay as well, like a gold 2.0, a better form of gold. And that would actually be making sense because you can transfer it, albeit a little bit slower than anything else. But some other digital currency or cryptocurrency could become the replacement of a fiat or something like that. So why not, right? Why not? But do I believe that it will happen in this economic cycle? No, I don't really believe that is going to happen. 1 second. So one of the things that I wanted to explain to you guys as well is the following. Where is it? Where did I put it? No, that's the Chinese article. Oh, here. Okay. Whew. It's already an hour, but I guess we just keep going today because we're on a roll. Okay, so what I wanted to explain to you guys also today is who owns the U.S. national debt, because a lot of people are, when the FED is making debt, who is basically holding the all the debt, right? And as you can see here, the breaking down the national debt is into two pieces. 74% is debt held by public, and 26% is held by intergovernmental debt. And as you can see here, basically, this is what the debt of the US is being held from the 26. So 26% is from countries, and 76% is basically public. And as you can see here, Japan and China are basically the two, and UK are basically the three biggest countries that are holding the US debt. And of course, that's also one of the reasons why there's a trade war, right, between the US and China. So, but the problem is a lot of people don't understand that actually most of the majority of the US debt, all these trillions, are held by the public. So what does that mean is that all the debt that the Federal Reserve is creating, it is mostly by the mutual fund and other entities, as like individuals that are holding all those debt. So as you know, the whole stimulus package of 7.2 trillion, where is that going to be ending up? Well, 74% of that is going to be ending up into the public people. So whatever the government is doing, all that money will be coming from the people. So the more debt, and we already have a lot of debt, is going to be held by the public people. So the normal people are going to be basically be holding the hot potato, let's call it the hot potato of this whole crisis. So not the banks, not the companies, but the normal average people are going to be holding all of these debts. So whenever the US is holding, is creating or buying up the bonds and this and that, it's actually partially it's partially getting owned by the public people. So I think that's very interesting to be looking at, because there's a lot of people who are saying like, well, we should help the people more. We should, all these companies that are in jeopardy, we should bail them out. Sure, that's the logical thing to be thinking. But the problem is that money has to come from somewhere. And what people don't realize is they only see like, well, we're distributing all this money towards poor people, but at the end of the day, 76% of that money is actually coming from your pocket, not from anybody else. So doesn't mean that we have to be a little bit more selfish. Doesn't mean that we don't have to help out people. Of course, I strongly disagree about that. But at the end of the day, do know that there are a lot of consequences with everything that the government is doing. And the problem right now is the government is trying to bail out everybody. And that bill is going to be coming from our pocket, the normal people's pocket, spread over the next coming few years. So things will not be as easy or efficient over the next coming few months. And that's also one of the reasons that I'm saying, like, look, I think we will have a W or an L. Well, and let's stay positive, and most likely we'll get a W correction over the next coming few months. But do I think that we will have an amazing year next year? No. It's just as simple as that. Because whatever the government is doing right now, and it's not only, of course, the US, but the US has the biggest influence over the market. They're the market leaders right now. The US dollar is still the strongest currency right now. Is that the effect of everything will be lagging towards next year. So if you watch my stream yesterday, you've seen that all the professional hedge funds managers, everybody, they are all liquidating. They are all selling. They are all selling their stocks. You saw Warren Buffett selling billions of stock. You see all these politicians selling their stock. And meanwhile, the media is telling everybody, hey, see, the market is going up, guys. You don't have to be worried. You should be buying. Don't miss out on this run. We'll be back to normal when the economy, the markets open again. Everything will be normal again. So, of course, the volume is low because most of it is being bought up by retail. Price is going up because there's not that much sell pressure. But that's what basically what these institutions want, to have the retail to be holding the hot potato. So this is not yet a buyer's market. That's basically what I'm personally thinking. So I'm not a financial advisor. This is just my own opinion. What you do with your own money is, of course, your own thing. But like I said, if I'm seeing that all these professional institutions, all these rich people are selling and not and moving into cash, and I showed you yesterday as well in an article that they're saying that the amount of cash held like on a bank has never been as high as today as since 2000, since the attacks in November 11. So can you imagine? The amount of cash is just increasing. What does that mean? It means that people are selling to get cash. Why are people selling to get cash? That is because they are waiting for a good opportunity to buy. That's what investment is all about. Waiting for the right opportunity to be buying. So when I see all these people saying, well, look, it crashed already 30%, guys. Buy the dip, buy the dip. But if you are a cryptocurrency trader, you know that you've experienced bear markets already, right? We've experienced bear market already. But people who are trading stock market, they haven't experienced bear markets yet, right? So we know what happens during a bear market. But look at this, guys. This is what is going on in the S&P. Literally since, what is it? 2009 to 2020, it has been a bull market. And of course, during that period, buying the dip works, right? Of course it works because it keeps going up. So it's the same as here when we had our major bull market in 2015. It started in 2015, right? Yeah. Oh, let's take the Bitstamp chart. Oh. Down. Yeah, let's go start around here. Yeah, since 2015, buy the dip, went back down, buy the dip, went up, went back down, buy the dip, 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 went back down, went back down. Don't buy it anymore, it's up. But basically, of course, in a bull market, you don't have to be a genius. You just have to buy the dip. This is just so simple. And in the stock market, we have been into a bull market for the past 11 years. So all these stock traders, all these people, they all think that they're geniuses because they just bought the dip for 11 years and it worked and they were rich and they made a shitload of money. So that's cool. That's all cool. But if you're a cryptocurrency trader, right? It went down. Should you have bought the dip? No, it went lower. It went down. Should you have bought the dip? If you bought the dip here and you didn't exit, it went lower. If you went here, should you have bought the dip? No, it went lower. So what I'm trying to say is, as a cryptocurrency trader, you know that during a bear market, you cannot use the buy the dip strategy. So DCA doesn't work in a bear market. So the only thing I'm trying to say is, what if this one, it's a very big one, went here, buy the dip doesn't work. We go back up and then we go lower. What if buy the dip doesn't work here? It goes back up and we go lower. What if we go up here and we go lower, and buy the dip doesn't work here? That's all I'm saying. It's very simple. Or maybe we should buy the dip here. Should we buy the dip here? 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 Anyways, I'll stop the stream for now. Like I said, stay awake, guys. 9:30, opening of the New York Stock Exchange. I think it's going to be fun times, right? So stay awake and let's see what happens. But I think it's going to be fun times. Bitcoin, my view hasn't changed. I'm currently bearish, except if we break the month and if we close this month above 7.3k, this one, I've said that also many times already. Below the EMA 21. Let's go back one more time. This monthly, very clear, yellow line currently at 7,269. If we close above this yellow line, I will be flipping bullish. I'll be saying halving works, guys. Buy the dip, go for it, let's do it. But I don't think we will. So that's basically when my bullish stance will change on a technical perspective. Right now, what I'm seeing is bearish cross, and a lot of resistances above here. Rejection of the EMA 100. This blue line has been rejected 1, 2, 3, 4 times. What will happen next? Most likely more down. We are still in a downtrend, guys. Sorry for all the bullish people over there. Sorry for all the people, for all the miners out there. I'm very sorry, but that's what technicals are telling me. So I have to put my money where my mouth is worth, and most likely we'll be seeing 5.8k for now. That's what I'm thinking. So not that bearish. It's just a $1,000 move downwards. That's it. Don't be too bearish. Bitcoin is still awesome. So speak to you guys tomorrow, 7:30 p.m. UTC +8. Hope you guys enjoyed it, and until tomorrow, stay home, stay safe, and of course, stay COVID free.